Hey folks, Dan Frio here with your weekend review for February 10th, 2025. So what I thought I'd start doing is coming out on the weekends, letting you know the data that's coming out this week and how that data might be affecting these things right through here. So we have an action-packed week right now coming up to the Federal Reserve's next meeting. So the next meeting is in 10 days. So there's a lot of data coming in this week that's going to help make this decision one way or another what the Federal Reserve is going to do. So that data is going to be right through here. Here's what we're going to recap in today's video. The government's almost on the brink of shutdown. So the Republicans come up with a bill to avoid the shutdown. That's hitting the news channels right now. We're going to go over to the economic calendar we have for the week, and there's a lot of data coming in that will be moving the market, such as consumer inflation, producer inflation, as well as initial job. So without further ado, let's get to it. So my name is Dan Frio, where my slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? All my information at the end of this video to find out how. So stay tuned for that. So Friday, we saw mortgage rates basically do nothing. It's going to be a game changer this week because the Federal Reserve is going to meet in 10 days. Okay, what do they look at? Well, let's go over to this. This is what we look at. This is basically the economy at a glance. Okay, so they're focused in on, they control, the Federal Reserve controls this rate right here, the federal funds rate. But they're most concerned about this. They have two mandates, and you'll hear Federal Chairman Powell speak of many times that he'll say, we have two mandates, and we have two mandates. What's that mean? Well, the two mandates were basically, we created you for these two things. And the two things were this: inflation. They want to keep inflation in check. And also the employments. They want to keep the job market at full employment, as well as having a robust GDP. So the number that we got out just recently was the unemployment rate. It came in last week. It ticked actually up to 4.1. We had the PCE, the number one inflation figure that the Federal Reserve watches, actually clicked down from 2.6 to 2.5. So this week, what do we have coming up? Here's the easiest way to do this. We have on Tuesday, we have the JOLT index coming out. This is job openings and labor transfers. Going to see how the transitory piece is going in the job environment. We're hoping that this stays below 8 million in the 7.6 to 7.7 range, right through there. Now, here's the data that we're really going to focus in on: inflation. Okay, we got two major pieces of information coming out this week. It is the CPI and the PPI. Okay, so here's the best way to remember this. Okay, when you're seeing a CPI, think of the C on the front of that is consumer. So consumer inflation is coming out on Wednesday. Then we have the PPI coming out on Thursday. And P we'll think of is producers. So producer inflation is coming out on Thursday. So I wish it was flip-flop, because we want to see what's going on with producer inflation, because if it's going up, well, most likely they're going to push their costs over the consumer. So thus, it would push up the consumer inflation numbers, but it comes in backwards. So here's what the expectations are. I'm going to give you a hypothesis, I guess, of what I think they might be coming in at, but by no means it's going to be a guess, folks, because these numbers are all over the map based on the inflation and tariffs and all this other stuff. It's really hard to figure out what's going on right now. So let's get over to these, what I'm thinking. The JOLT index, I'm thinking, is this number is going to be probably skewed. We have a lot of people in the government level now that have been released. They're going to be in the workforce. So are they going to be labor transfers or so forth? So these numbers are going to be really skewed for a while until the markets really stabilize. Okay, so what we're really going to focus in on this week is consumer and producer inflation. Okay, so here's how to read these charts through here. You're going to see core, CPI, MOM, Feb. What in the world does all this mean? Well, think of it this way. There's CPI, which is just regular inflation. Okay, so what this is, you're going to have CPI, MOM, CPI, YOY. MOM means month over month. So basically from January to February, that's what you're looking at here. This is consumer inflation. This YOY is year over year. So basically from February of last year to February of this year. And then core inflation, MOM, means, what core means is they strip out, they pulled out food and energy. And the reason for that is like eggs. Eggs are $10 a dozen now or something like that. And it's really volatile. Same thing with gas prices. So they take out fuel and energy, or fuel and food and energy, just to stabilize it, because those are too sporadic, I guess is the. So here's what they're thinking. The core inflation month over month was 0.4. It's going to go down to 0.3. A lot of these numbers were kind of flip-flop the other way, and I'll explain in a second. Then we have the core CPI year over year. They're saying it went from 3 to 2.9, right? And then the CPI month over month, 0.5 to 0.3. If these numbers come in like this, it's going to be good sailings, okay? But what's happened is last week, a lot of the data that we had was going up. So let's say, for example, they said, some inflation numbers were 0.4. It was going to go up to 0.5. So a lot of those numbers came to fruition, and the markets kind of digested it, I'll say, okay. All right. So these numbers coming in now, they're saying it's going to go down. Like, for example, the CPI month over month from 0.5 to 0.3. If it comes in at 0.4, what's the market going to react? Even though it's going down, it didn't go down as much. Let's say it comes in at 0.5 or 0.6. What's going to happen to the markets? I'm going to explain kind of different scenarios on what's going to happen here and also with the initial jobless claims and PPI. And I'll explain why. The Reserve right now is saying, okay, inflation's not coming down like we thought it would. But before we do anything, or to do anything, we're going to need the jobs market to really start to deteriorate. So when we had ADP payroll numbers coming in last week, they were expecting 144,000 new jobs to be created, and there were 77. Markets were on edge. They're like, okay, now what's the real government numbers going to show us when it comes out on Friday? So that number came in on Friday, and it was okay. The unemployment rate did tick up from 4 to 4.1, but the jobs market is still averaging over 200,000 jobs per cycle. Now, that's fantastic when it comes to the long range of that. So I'm okay with the jobs market right now. We're going to see how it goes. And the concern that I have, too, is a lot of migrants who got pulled out of the workforce. Are they going to be replaced, and who are they going to be replaced with, and what weight? That's number one. Number two, all the government workers that were stripped out. And not all of them are going to retire or do whatever. They're going to be added back to the workforce. So how's that going to play a role in all this? Only time's going to tell on those things. So then we go over to the inflation number. And here's my expectations on this. You're going to start seeing these numbers come down because housing data, month over month and year over year on the housing piece is really flattened. And we're also getting a nice reprieve right now in energy, such as oil. We have oil under $70 a barrel. Why is that so important? And we watch it every day on my channel. Oil is the lifeblood of our economy. So as oil prices went up, inflation's going to just keep going with it. Just think, to get something from here to there, if it's going to cost you an extra 10%, you got to add that somewhere, unlike the tariffs. But now we have energy prices coming way down. So now you're not going to have to pay as much to ship that or produce that. So could those prices start to come down? On the producer side, that side, the manufacturers are reluctant to bring down prices, but they're going to do so. You saw, even my kids, playing about Taco Bell and all these, dollar meals and everything, how they went from a dollar meal to now a $5 meal. They're going to go back to $1? Maybe not, maybe $2.99 or something like that. So that's how the markets are stabilizing on a lot of these things. My expectations are consumer inflation is going to start easing. Big components of that is housing, which is starting to really stabilize. And like I said, the energy piece. So this number just in general is going to go down because of that. And then you also have hopefully all this the crackdowns on Doge and everything else. And I'm not going to get political, but could that actually save us a lot of money when it comes to the deficit? Because the deficit is a big piece of this equation as well. So that's what we're going to continue to follow. But I'm going to say these are going to come in line. I don't know, like some of these from 0.5 to 0.3, if it came in at 0.3 or 0.4, would I be kind of real skittish? We're going to see how the markets react to all this. But I'm just going to go out on a limb right now and say, okay, I'll agree with all these numbers. If these all come in like they hopefully are expected to, what's going to happen to interest rate? Well, let's get over to that. So here's what we've seen. Well, here's the economic news that's coming in for the week, but let's get over to what's we're expecting in the bond market over the next coming week or even just next week. So here's what's happening in the bond market right now. We're going to take a look at the U.S. MBSs. This is the mortgage bond that trades on Wall Street, and this is what happened on Friday. So is the market, here's all you have to understand, folks, with these charts. What you're seeing on the mortgage-backed security bond is right through here. It gives us a price. So it's at $99.08. But the weird thing is, if you look at other interest rates, like the 10-year Treasury, it actually gives us a yield. Yield right now is 4.29. You don't want this to go to 4.3. Okay, there's a lot of trigger points that might kick in at 4.3. So we don't want that coming in. But how do you decipher, okay, the MBS is at 99.78. So what's the yield? What's the rate? Well, the rate's important because the yield on this bond is the biggest component of your mortgage rate. So we have to figure out what's going on with the yield or interest rates. Okay, so the easiest way to do this is to understand this. If the price of this bond is going down, rates are going up. Okay, if the price of the bond's going up, they're coming down. Let me explain to you how this works. I usually try to do this every month or so. So let me just make it as simple as I can. Let's say I'm going to purchase this bond from you. You'll be the bond trader in this equation. So the bond that you're going to offer me it has a maturity value of $100. So at the end of our investment, you're going to give me $100 back, no matter what I give you as the initial investment, because that's what creates the yield. Okay, so let's think of it this way. I pay you $50, a low price. I pay you $50 today. You give me the bond. And then whenever the maturity of that bond comes, I give you the bond back and you give me my $100. Okay, that's the maturity value. I paid you $50. You gave me $100 back. What's my rate of return? 100%. Okay, I doubled my money. Okay, so that's a low price. So let's now pay a higher price. Let's go all the way up to the extreme $100. Pay $100 today. You give me my bond. I wait till maturity. I give you my bond back and you give me $100 back. What's my yield? 100. Give me 100 back. My yield's 0. Get it? You pay me a lower price, the yield goes up. So we love when this goes up. Well, here's what's happened over the last like five or six trading days. It's been flat. There was a nice little rally through here, and this is why we've been talking and calling a lot of people. We're like, guys, these rates that we're seeing right through here, let's go back to a 3-month chart. Rates that we're seeing right now are the lowest we've been at in about three months. Back in September, when everybody started refinancing, you might even miss this. You tried to refinance in September to only find out when the Federal Reserve cut rates. Mortgage rates went up 1 full percent within like days. Don't miss it. So I'll give you all my information at the end of this video. If you have a mortgage, please kick the tires to see how much money you can save. Most people are saving like $300-400 a month, and their break-even point's 6 months, more than that as well. So that's our report for the week. So here's what we're looking at for the calendar. Basically, nothing on Monday. So we're going to just get caught up on Monday. Tuesday, we have the JOLT numbers. That might shake the markets because this is job openings and labor transfers. We have inflation, consumer inflation coming in on Wednesday. And then on Thursday, we have producer inflation. These will be market movers when it comes to this. The Federal Reserve monitors. And when it comes to this, when the Federal Reserve actually meets and they tell us what they're going to do. Now, the expectations of what they're going to do is right through here. Let's get to the probability section. So again, remember, right now, the federal funds rate, this is the rate the Federal Reserve controls, is 4.25 to 4.5. We go over to this chart right through here, 4.25 to 4.5. There's an 88. This was 97 not too long ago. There's an 88% probability that the Federal Reserve is going to do nothing at the March meeting. Same thing with the May meeting. But in June, now it's saying there's a 47% chance they're going to cut rates again in June and then once again in July. Not unless these numbers start to cooperate with. So we're going to be focused in on these numbers this week to see what happens with these. So hopefully all that makes sense to you. And if you're out there trying to buy that first house, maybe buy that first investment property, maybe you're looking to refinance. You're like, hey, Dan, I did close a loan. You closed your loan in the end of 2023 or the beginning of 2024. You probably have a rate in the high 7s or the low 8s. I'd love to help you get out of that and maybe save some money. Again, pigs get fat, hogs get slaughtered. What do I mean by that? Well, so many people are, they're at 8%. And I call them up and I'm like, okay, we can get 675 and save $500. They're like, they're going to come down even more. Guys, if you're saving $500 and your break-even point is 6 months or less, kind of a no. So how do you reach out to me to figure out all this stuff? Well, first off, I want to do a public service announcement. And I talk to probably 10, 15 people a day. And I say, did you do it? They're like, no, I saw it, but you're going to thank me for this one, folks. Here's my public service announcement. If you're trying to buy a house or maybe refinance or buy a car, I need you to go to opt-out pre-screener. Here's what this thing does. I didn't create it. I think the government, somebody created this. What happens is, did you get on that do not call list? Because you were just getting sick and tired of just people calling and calling you. If I told you that the credit agency sells your data, credit data, your financial data, everything. Once we pull your credit on your home loan, car loan, not me, any bank. If you want to stop that from happening, go to optoutprescreener.com. You'll thank me. But what's that saying you say, Dan? One application, one credit. What happens? I'll tell you who I am and what I do. My name is Dan Frio. I've been doing this over 35 years, and I'd love to help. I'm licensed in all 50 states as well as Puerto Rico because I work at a federally chartered bank. That's cool. Here's the unique piece. We're also set up with 30 other lenders. I'd say, okay, how does this work? Well, that's where it comes into play. One application, one credit pool. We're going to shop your loan over 30 different lenders. So here's how it works. You put in your application, you go to the rateupdate.com, and you can put in your application right through here or several other ways. And what happens is when we get your loan, we'll start to write it, review it, see what we get you approved for. But a lot of people say, Dan, do you have the program? Do you have the rate? What other discount? Do you have a down payment assistance programs? Guys, here's the compliment. I work at my bank. All 30 of these other lenders, I can offer their programs, their rates, down payment assistance programs, any grants that they, a whole ball of wax. So if you can do this on your own, please do. Okay. So here's what I'm trying to do. I'm trying to help people that really, if you're just out there shopping, you know what you're going to do. Your only concern is the lowest rate. Keep looking. I want to partner with people that really need my help. Okay, so what happens a lot of times is people, they'll reach out to us, we'll work with them, get them under contract, start working, and be at their beck and call for a month. And then they'll call and say, hey, this other place, they beat you by $250. So we're going to go there. Bad way to. So I'm not looking to do business with people like that. I want to help people out. I want them to understand. Let's help you get in the application. Let's pull your credit and help you understand credit. Let's go over and pick the loan program we're going to go with and why behind it. And all those are the people. Your only goal is just finding that lowest rate. Good luck out there, shop. You really need our help with this. I'd love it. So how do you find out more about me? Well, go to the rateupdate.com. You can do one of several different. One, you can put in your application right through here, Buy Now tab. You can schedule a one-on-one consultation with me right through there as well. Then we basically just talk and I'll answer any questions that you got. Or if you want to jump in the front of the line, you can scroll all the way down to the bottom of the website and you're going to find our 800 number as well as my email. And I respond to these. So people get shocked all the time. Send me an email. Just give me your question, your concern, the help you need with your phone number. I'll be more than happy to call you. Talk to people every day and they're like, oh my God, didn't realize you would call. Yep, folks, I told you I'd call. Don't be surprised if I call you. So please reach out to us. You can get us at 844-775-5626 or send me an email at dan.com. So hope you learned something today. Join me each weekday in the morning as well as the close to see how the market reacts. But our focus is on, we do talk about equities and cryptocurrencies and so forth, but our focus is on right through here, how to buy, manage real estate, to finance it. That's my. So thanks for watching, folks. God bless. Have a fantastic day. Hope to see you back here tomorrow morning with the opening bell to see how this mess starts for another week. Thanks for watching, folks. See you tomorrow.